Hello, hello, hello. Happy, what is it, Wednesday? How's everyone doing? Sorry, I only gotten a total of 6 hours of sleep the last 2 nights. So, a little behind on sleep. Wife's out of town. She's in Chicago working. So, dealing with, 4 dog walks multiple times a day. Got to take them separately around here. And, dealing with everything. And then monsoon season. Got thunder at night, dogs stay up, and whew. So, if I'm a little sluggish, that's what's going on. Got my coffee here, but you know what? Started drinking it at 4 a.m. Still needs to kick in. So, by the way, still can't, tried to reset everything, still can't, Twitter or X won't let me stream anymore to X. Something's going on with my account anyways. YouTube videos are just dying. I'm going to have to switch to like Rumble. Again, not for political purposes or anything else. This is just a joke. This is turning into a joke. It's actually getting to be the only reason I'm doing this is for the people who tune in regularly at this point. So I'll probably be making that cut over and very shortly. See if I can get stuff working on there. So I'll keep you all posted if if you don't want to follow me there, then I'm sorry. We'll see how this goes, but I can't keep the videos are just getting crushed on YouTube and can't even stream to X anymore or the other YouTube or the other path trading partners. That's been dead for a while. So don't know what else to say. Just trying to keep this going to help people. If you don't need help anymore, you don't want to tune in for this, just let me know too, because I can easily just do my own thing in the morning. Really appreciate Sterling being in here, putting in some information because I am literally somewhat behind on the news. This morning, I was actually more so looking at the markets. U.S. shadow banking system most likely source of global credit crisis. I completely agree. I mean, it's in the top. The shadow banking thing is a nightmare. The unregulated banking and because that could actually trigger the massive. The derivatives market are so over leveraged too. That's where you get the cascading effect. I don't know what the tipping point could be. I don't know what it is. I think it's going to come out of nowhere. But if we get a cascading effect, it can unravel very, very quickly. And I think the Fed is still handcuffed because, yeah, they'll start dropping rates. But look at the container shipping rates. They've been climbing over the last few months. Container shipping rates out of Asia are, again, climbing a lot. That is not deflationary or disinflationary. Oil, even though we're pulling back a bit, is still holding in there. Even though the market's like, okay, still pricing in immaculate soft landing. I mean, we had the Russell and Dow, and I mentioned the Dow. Watch that if it takes up those tops, and it exploded yesterday. Russell is still on a tear. Gold, mentioned that, and really sit up and watch for that triple top breakout, and we did. So there's opportunities. Now NASDAQ, and this is what happens. Already, we were starting to see the rumbles with AI. AI has been so overdone because there's no way these companies are going to make money with it yet, based off the data center costs, the energy costs, what they're overdoing, and it just does not have that much use yet, and there's no way to really monetize it. I'm not talking there's no way to partially monetize it. There's no way to yet make a profit with the AI is good at some things and really crappy at others. And so you're starting to see the rotation out of that. Starting to see, I also think the Russell, besides some massive short squeezes, and thinking that if the Fed drops rates even a couple times this year, like the small caps are going to get saved. Well, everybody talks about the lag effects on the way up. You know what? There's a lag effect. There's a lag effect. There's a lag effect. Well, there's also a lag effect on the way down. But everybody thinks like a magic rate cut in September, everything's going to be fine. You know what? Every company is going to turn around. But also, if you're handcuffed, we start to see this is what I'm worried about: sticky inflation. Sticky inflation. Let's say we stick around 3%, and the Fed starts cutting, and that can actually start revving up inflationary. If we get in a global conflict, especially if there's a Chinese and Taiwan conflict, you want to talk about stoking inflation? Okay, so then what does the Fed do? You start getting inflation rise again, and they're trying to cut, into a recession. What do you do? And the market's still priced for perfection, even with this morning pullback. What are we down? Well, I mean, people already reached out to me. Oh, we're down 1%. What's going on? You're down a friggin' percent, and we haven't had a 2% pullback in forever. And you're worried about what? And I'm talking the S&P, not the Nasdaq. You're worried about, oh my gosh, it's blood in the streets. We're down 1%. Look at you know. So sorry, there's my little bit. Good morning, Sterling. Well, U.S. government debt after shadow banking comes in third place, but this is a ripple effect. This is the ubiquity sandcastle, the sand cone. I don't know what's going to trigger it. It's just very, very, very unstable. And anything can trigger, but you have the shadow banking. You have the massive over leverage in derivatives. You have the U.S. I mean, we're not even, whether you say we might have entered a recession already, or we haven't been in a recession for a bit. You could say we might have entered one this spring, this summer, but you can't say, we've been in a recession for over a year. You can't say it. Though data does not hold it up. So we're not in a recession, or we're just getting into one, and the government's still spending like drunken sailors. So we shall see. We shall see. What else? Good morning, John. So let me know your thoughts. Let me know everybody's thoughts. The equilibrium price of a WTI oil around $70 a barrel. I mean, that still keeps it in consolidation. I doubt it's going to pull back that much, especially if something blows up again in the Mideast. Sort of all quiet on the Western Front now. What else? Sterling put in the housing starts. Everybody tells Sterling we missed him when he was on vacation. Kremlin says Trump presidency yielded nothing good for Russia. And by the way, Sterling does all this just to help the channel. And I don't make anything. Just, again, complete transparency. There are no ads. There is nothing. There is no revenue stream from this channel at all. It actually costs me money to put this on, because I have to pay for eCam. The only thing I use the TradingView for, it's a wonderful charting service, but the only thing I use it for is for to stream, because I'm not going to stream my brokerage accounts. I'm not going to stream all the stuff with my key stuff in brokerage accounts on a live stream. That's just too. I think I did that once, and I forgot to block out my brokerage account number, which is never a good thing. You don't want to live stream with your brokerage account. You really don't. Or your multiple accounts. Or your trading accounts. What else? Yeah, that's real helpful, Barclays. Raise price of target to 225 for 180. What's target? I mean, Tesla. Raise of Tesla. It was lower than that. It rallied to like this 250s, and now you raise. These people are useless. Their information is useless for trading. Yeah, Diamond could be the next tapped. If that's coming out, it's already that Trump's probably spoken to him. U.S. is spiraling out of control following Trump. It's been spiraling out of control before that. That was just that made it more obvious to people. Who thinks that it wasn't out of control before? Who thinks we have not been out of control for a while now? We're living in a land of insanity. Good morning, Jacob. Yeah, there you go. Sterling is back, baby. If this move is truly over Trump comments, I think it's a bit exaggerated. It's not. The energy's starting to shift. We're also still going to see more and more shift out of AI, period. It's gotten overhyped, but this is how it starts shifting. It's already positioned. The sector ran too far, too hot. And now we're starting to get the shift. It's also why I think we rotated into the Dow. Now, the Russell is still shocking, but there's lots of short squeezes. But a flight to the Dow is more of a flight to safety. Although you're still going to see that get hit too. We just don't have a major long-term sell signal yet. That's why. That's why, the trend is up until it triggers a longer-term sell signal. Do you need a doghouse or two? If I had two doghouses, I'd be in one of them. Good morning, Ted. Not to worry, you coffee will help. I work night shift. Hey, thanks for tuning in, PMG. Where are you moving your service to now? I'm thinking just going to Rumble. I'll let you know the channel information. It'll probably just be some kind of personal channel. So we'll see. Again, I'm not moving I'm just moving because I can't get the stuff out there and I'm tired of YouTube. We have the core group that wants to follow. Everybody can still sign up for a Rumble account. Again, not political or anything else. I'm not saying this, it's just things are turning into a mass steaming pile of garbage out there. Hey, Eric, how are you doing? Royal Palms definitely always need you. Good morning, Anissa. Coco, gold just broke out yesterday. Are you inverse person, Coco? Good morning, Heinrich. Check this out from my former home city, and I'm so glad I'm out of Chicago. Oh my gosh. What does this say? Mayor Johnson just announced they're removing the Washington statue from City Hall, just like Trump. Why? Why? Stop. Worry about your gun crime, the black on black gun crime. What was it, July 4th weekend? Over 100 people shot? Most of it minority on minority violence? And you're worried about taking down a friggin' statue? What a joke. Well, we'll figure. Maybe there's some way to do stuff. And don't do any things on YouTube. Don't do any donations or anything. Don't do anything donation on YouTube because I'm going to switch off of it. Could you teach how to manage gold longer term for someone who can only have one contract? I just trail, Jake. I say very easily. It's easy conceptually. Use a weekly to monthly chart and move trailing stops at key levels where a longer term reversal pattern would be triggered on a closing basis. And again, if you're in gold for a longer term, you're not trying to call the absolute top. You're trying to let it run until there's a major reversal pattern, and then you lock in as much gain as you can. All right. That's how we'll do it. We'll take a quick look at gold. Sorry, I'm not getting... we'll get to the charts. We got mortgage stuff coming in, and I got more brokers calling me. You're ready to make some... I actually found a house we're interested in making an offer on, but it depends if I can get it at a decent price. It's still overlisted, but I actually did a private tour with the sellers yesterday to ask them some questions. Because they're moving into assisted living. Beautiful house. Beautiful house. It's whether I can work out a price with them or not. And I know I'd have some downside risk, but this is a house I'm looking to stay in for my next 20 years. So we'll see. We'll see if that works out or not. We'll see if it works out or not. But mortgage, I mean, agents are calling me. Rates are dropping. They're down. Yesterday was 15 basis points. Rates are down like 15 basis points. It's like people are going to start putting in offers. If you're putting an offer based solely off a mortgage rate dropping 15 basis points from 7, let's call it 6.85, you're a moron. If that's your trigger point, I'm sorry. You better be negotiating the crap out of the price before you worry about a 15 basis point mortgage. Building permits, preliminary numbers, these will get revised lower. What else do we have? We got Barkin speaking. We got industrial production coming out at 9:15 Eastern, capacity utilization, manufacturing production. We got Waller speaking at 9:35. We got the EIA numbers. I really want to see these EIA numbers with a crude barely triggered. Now, this is definitely a channeling double. I'm very cautious on this crude. I'm looking at for more to pullback levels. Then we got some bill and bond auctions, and we got the Fed beige book. S&P 500. Oh my goodness. What's going on? Well, you got Intel. Intel's up nearly 500 basis points. 5 basis points. 500 basis points. What's going on? I did not see the news on Intel. But everything besides now, where's I'm just wondering because Intel, parts of southeast Phoenix around Queen Creek area are still booming because of the Intel plant. Also in North Phoenix, up where I'm looking, there's a huge TSMC plant being built. Massive. One of the reasons I'm looking in that area. But other chips pulling back. If you don't want me sharing information with you, then let me know. I don't know if it's boring to people. But the mega caps. We're also getting a rotation out of mega caps. Look at the slight rotation into defensive today. Groups, technology, healthcare. The only thing, let me refresh this. Because, yeah, this is a rotation into safety today so far. Now, a rotation in the safety after a market's been on a tear, that's a minor thing because we're not triggering a massive topping pattern. We still have the above 90% rate cut baked in, and then look at the cascade. They're thinking 1, 2. You know what? If the Fed is literally doing 1, 2, 3, 4, 5, 6 cuts potentially in a row, or nearly 6 cuts in a row, this economy is falling off a cliff. And you have bigger things to worry about than rate cuts. Especially the market price beyond perfection. Fear and greed. We are back to greed mode. The breadth is picking up a bit only because of some rotation into some cheaper of the S&P 500 stocks. But it's still long term. Now the trend is up. The trend is still up. Oh, we'll have to see how tomorrow TSMC reports it. ASML, big drop. They were a beat, but they were a big drop. I did not look at Johnson & Johnson, if anybody has that. I was a little behind today. After the close, we got United. So I'm going to look, after the open, I'm going to look, double check some of these things. United, really watch for charge-off stuff with Discover. Since Discover hits somewhat of a lower tier credit base company historically, watch for the charge-offs. And then we got Alcoa. Oh, look at that. What do I have? I have Met up there. This is a grinding double top. Now, this is what I'm saying. Let's say you were trailing Meta from a longer term perspective. I know where that would be for me. I'm using this as an example. Let's say for Meta, you caught it, let's say you caught it at 221. Now we're trading 493. First warning sign would be a close below the 50. retracement and the weekly. If I was trying to get aggressive with getting out of something, I'd use a weekly close below 62.5. And you could apply the same thing to anything, even gold. Why would this be the final line in the sand for me? Well, we got the 50-week down there, and you have a double. If we gave up both those points on a weekly closing basis, I would not want to be long this anymore. That would be my final line in the sand. That's an example. If I wanted to get out earlier, I'd be looking at this 62.5 on a close below that. Other than that, you can have a pullback. Yes, we have massive divergences. But again, I don't know what the market's going to do. Don't know what it's going to do. I mean, look at this. It's not stable, but can instability continue a lot longer? I mean, look since the October lows. It's still wedging higher. But this thing could pull back without triggering the wedge on the weekly basis. You know, even a pullback to 5,500 does no technical damage in the medium term. And I am shifting to more and more. I've been long-term bearish because the valuations don't hold up. However, it's still up until it's not. Now, if you're very short term, would I be waiting for 5,500? No. Short term, at least I'd be watching the daily rotation zone, worst case, because short term is very different from long term. Keep your time frames in mind. Time frames are so key. Big reversal bar so far, down 108 basis points today, testing the rotation zone on the daily. Watch today where we close in relation to 56, 58, 75. We close below there. We could easily retest the lows from Friday the 12th. If those break, let's just see where the harmonics give us, because I like to look ahead for planning perspective. So using the little reverse harmonics, I'd be watching for the next key level. If the lows from Friday break, would be watching this 55.96 to about 55.88 would be my next major support zone looking ahead, which is also tying in to this high area, spike high area from June 24th. There you go. Thank you, Johnson & Johnson. Earnings EPS 282, estimated 268, so a beat there. 22.45 billion S2, so a beat. Coco, again, you sound like a broken record. The market is still up, but at least give me some give me anything. Give me something balanced. Is there any risk to the market at all, Coco? Is there any risk? Just tell me. Because it does not help to just, yes, the trend is easy. The trend is up. It's been up since the major percent B buy on the weekly basis last October. It's still up. Short term, you can still buy dips. Where are the risk levels? Let me know, besides sounding like a broken record. Because if you're going to come in here and sound like a broken record, you're not helping the channel. It doesn't help to just say markets always go up or gold's overbought. Gold just broke out. Long term, even with this consolidation, what I said, long term, gold's in a bull. Gold's in a long-term buy. It took weeks of consolidation. Now it's broken out. It can be easily overbought. Look at how overbought the friggin' S&P is. You don't talk about the S&P being overbought. You look at the NASDAQ. It's just dropping out of overbought. You don't talk about that being overbought. All you say is it's always going up. That's not managing risk. That's not helping anybody. All right. Percent B sells. Well, on the weekly basis, if this week closes below last week's low, and I'd also then look for if it closes below the 62.5. Good question, Richard. If it closes, then I'd be watching for the bigger pullback. And that could only be to the bottom of the daily rotation or the weekly rotation zone. To daily, I should say daily rotation zone. It could be to the top of the weekly rotation zone. We don't know. We'll have to see how it gets there. But I'd really be paying attention to these levels. Because last week's low is very key on a daily basis. But from a weekly basis, the only thing is to get a percent B sell. It would have to start closing below last week's low. Hope that helps. NASDAQ, you're starting to see, look, all right, so far we've got a flagging pullback. I already have the harmonics into the low of Friday the 12th, which gave me the initial projection that I was watching today, 2250. So I'm watching this, especially on where it closes today with 2200. If we continue to pull back intraday, 2172 and then 20,128 are my key levels. If we have disaster mode, it's 20,000. We have the 25% harmonic from the run-ups from the low April 19th lows to the 11th highs. So that would be the next major level I'd be watching. But we're coming into pretty significant support here. If you have to jump into the open, fine. Sorry, I went on a sidetrack this morning. But you see here, there's a lot of support in here. So on a continued sell into the open, I'm watching for some support down here. Also remember, NASDAQ, we could have, even if it bounces, we're getting daily cycles closer to a bottom, but we've had weekly cycles so overdone for so long, we could see an extended pullback. Coco, there's been sell signals. There's been some pretty big pullbacks since 2009. Okay? There's been some pretty big drawdowns and pullbacks. Yes, if you're long-term bullish, if you're in this for the next 20 years, this shouldn't bother you. But if you're in it from, especially people that are getting close to retirement age, if you're all in this market and all 100% allocated to stocks, I'd pay really close attention because you probably don't have 20 years. If this thing really starts pulling back, and it will at some point, you don't have potentially 10 years to wait for recovery. You're going to need some of that money. That's why longer term, yes, the market will recover. Although look at the, we could easily, if they don't get government spending under control, and we have other problems, and there is, the shadow banking, some derivatives blow up. We're already seeing also the commercial real estate issue. Residential real estate's the most unaffordable ever. And go back to Japan with the Nikkei. It topped what in 89? And it only recently recovered? How many years is that? It was over 30 years. A lot of people, if you're in your mid 60s to 70s, we could easily pull a Japan at some point. Let's even say you're at 70 years old and you're fully in this market, and I know some of them. You know what? You're going to try to wait out a 10-year recovery cycle? Good luck with that. Good luck with that. I mean, if you look at this, here's the dot-com bubble, and you say that can't happen again. It topped in 2000. When did it eke out slightly new highs? What's this? What year is this? 2020. What is this? 15? 15? That's 15 years. You could easily go through another 15-year cycle on a longer term. Are we there yet? No, we haven't triggered massive sell things yet on a longer term basis. But if we do, it doesn't have to bounce back right away. Here's your Dow. Here's your Dow. It's just hit the next key cluster, 41,323. Next one is 42,345. But this is getting to a massive ending pattern. Potentially. Everything's probabilities, not guarantees, but I know I'd start looking because, again, triple top, actually a little mini quad top. I talked about this. I said if this broke through here, watch. And it broke out on a tear. Now, how about this being massively overbought? Or are you going to tell me the Dow's for boomers? By the way, this is not valid anymore. Oops. So, but from a longer term, the Dow has a substantial area to pull back before it's got massive technical damage. The Russell hitting the next harmonic target, 2299, 2300 right there. Still, if the Russell keeps running, I'm expecting it's going to pause at least because it's got to let some of this pull back. But the only thing that really starts hitting the Russell then is back below 20,150. Keep an eye here. We're starting to get volatility edge up. And this, started getting interesting. But if we start really getting above about, I'm sitting up and taking notice. I said 14 was my key level. Now, if it starts forming a higher base above 13 and then starts moving above 1450 on a closing basis and then breaks above 15, watch out. You will get a correction. That's why, am I saying just exit everything on the long term? No, but know where your levels are. And the short term, or I'd say the medium term for me, I'm in short-term bills. Why? Because the reward I'm not trying to eke out a little more percentage. Now, if you're talking little short-term trades, swing trades, that's fine. Because you can get out. Know your time frames, and I have short, medium, and long-term time frames, and they're different portfolios. Like gold's in a long-term portfolio. Right now, medium-term portfolio is pretty much bills. Locking in over 5% and rolling it until it warrants something else. And then there will be a pullback that's buyable. With better valuations, hopefully. DAX. You got their pullback. Still stair-stepping higher. The key level still 18,324. The DAX is also triple topped. So, not saying it's going to break out, but if it does, we'll watch for the key levels above. Otherwise, it's still in the consolidation, still holding the rotation zone. Now, if your DAX, and I'd watch this anyways, if you start closing below the weekly rotation zone, it's probably over. Because that would also be the close below 62.5 of this more recent run-up. If you go for the last bigger run-up that we're still in, the 62.5 is right below the rotation zone, so I'd watch for that. Yields still climbing, close above the 62.5. Next thing is 111.25. Key support is still back at 110.25 roughly. Yield is still no closed below 4.137. Still holding in there. Yes, there is potentially a little mini bounce pattern, but nothing yet. 10-2s, still barely holding support. We're going to have to keep an eye on that also. Dollar index getting shellacked again. Came up, kissing the channel goodbye and the rotation zone and rotating down. Next key level, 102.47. Crude. This is why I was only watching it. Again, you coming back down, holding the 50 on a closing basis. Barely triggering the double, but holding the channel. So I was only looking for these, especially the 79 level for a potential pullback if it gets there. Now, double is still valid. Got to really pay attention to those EIA numbers. But that's where that sits. Gold. Yeah, gold's overbought. Gold, what do you think I'm watching if gold pulls back? The multi-top. What is the traditional pattern if gold pulls back? Retesting. Resistance being support with the rising rotation zone. Pausing at the first target. So for short-term trades, this would be where I'd raise a stop. Would I be worried about this from the long term? No. Gold from the long term, here's your weekly. Look where the weekly rotation zone is. I wouldn't be worried about crap. Now, in medium term, you start breaking below about that. If this does not hold the breakout levels and starts getting back below about 23.80, I'd really sit up and take a notice. Long term wouldn't bother me. All right. So know your time frames, because this was a multi-week sideways correction holding the rotation zone. Now, if the market gets absolutely shellacked, I'm talking the stock market, you will probably see, if we go into massive pullback mode in the stock market, where we start getting, a substantial correction, you probably will see a pullback in gold. Why? Because people will liquidate what's working for them and to cover other losses. And you look where gold started this year, this is up substantially. This is up substantially. Where's that? Oh, I forgot where the percent measure. There it is. Gold is up this point with the, over 20%. That ain't bad. And that's this year. What if I ever decide to start later, like you going in the open? We'll see. Let me get through this. The yen, finally, maybe this looks like maybe they're really trying to hammer this back. If this does not work, pay attention to 155.62. No buy pattern on the yen. Did not follow through with a percent beat buy yesterday. So I'm paying attention to 155.64. But what's interesting, you had the pullback in the yields, but now the yields are starting to bounce. If the 10-year yields get back this 110 area, watch out. Euro, we finished the 87.5 rule. Okay, at least for this pullback. Now there's a little other tip. Go to the bigger pullback and watch where it closes today, 109.37. Because that would be a new 62.5% trigger for potentially another run to 110 area. Spiders, After hitting that harmonic, the very weak pausing bar that's 564.79, which was, the closing area yesterday, pulling back to the daily rotation zone. Based off of this, off the last little run up though, it's holding a pretty key support area right now. If it does drop back, the major support for me if it continues to drop is 550. The minor support, I should say, is 556.50. The major support is 553. The Qs, I also have the harmonics on here coming in with a cluster. Not only the prior breakout zone, the rotation zone, and the harmonic projection. If this drops, then my next target is 483.37. All right. Bitcoin, barely eking out a close above the 62.5. So right now, watching for pullbacks, 62,736 being support. What else do we have? I know Sterling put a comment in there. Tesla, nothing to talk about there. You still have a potential double top. I doubt it'll trigger before earnings. It might be off the table for that. NVIDIA, really watch this 118.04. I took off the doubles over based off of this now. First and second targets hit, and now watching to really see if NVIDIA breaks down. You had URA. Didn't I? URA. Come on. What's going on? It's so far a nice consolidation. Now that came up and hit the reverse harmonic. You see the harmonic cluster pulling back. Remember, uranium generally backfills more than others. So I keep talking about traded around the core position, if you know what that means. Where could uranium go into consolidation again? It's consolidating now, but as long as uranium, I'm really paying attention to this 2765 area on a closing basis. If it drops back that far, I'll start watching for the bigger pullback and possibly a retest, closer to this longer term support. All right. With that, thank you for tuning in. I shall talk to everyone later. Have a wonderful trading day, and I will see everyone back tomorrow. Bye for now.